The main motivation behind autonomous technology, in my opinion, is our belief that it will significantly reduce the cost of transportation. We calculate that the cost of an autonomous taxi would be around 25 cents per mile or 60 Australian cents per kilometer. Well, that's around half of what it would cost to drive your own car, and it's obviously far less expensive than a cab. Therefore, we believe that this will help the ride-hailing industry grow and, well, provide a lot of people who don't currently have access to it with extremely affordable point-to-point transportation, especially in areas like China. They'll be considerably safer, of course. Additionally, we estimate that driverless vehicles will cut accident rates by almost 80%. The majority of miles currently occur in urban markets, and we believe that most urban driving will become automated. As a result, you may imagine a household with two automobiles becoming into a one-car household, and a one-car household eventually reaching zero cars. You probably won't need a car if you live in a metropolis, and you could take an autonomous vehicle to work every day if you so desired. We'll be looking at Tesla's most recent earnings call today, when they discussed the enormous potential of their robo-taxi service and showed off their upcoming ride-hailing app. The ramifications of China approving Tesla's fully autonomous technology and the rumors that the company may lease its FSD technology to other automakers will also be examined. Tasha Keeney will offer her professional perspective on regulatory obstacles and their effects on the introduction of autonomous vehicles. Watch this space to learn about Tesla's plans to expand their robo-taxi service, the effectiveness and financial viability of self-driving cars, and much more. You won't want to miss this if you're an investor or Tesla enthusiast. To ensure you never miss an update, be sure to hit the notification bell, like this video, and subscribe to Tesla Stock News. Let's begin. Tesla displayed a prototype of their upcoming ride-hailing app during the most recent earnings call. This app gives us a preview of what the user experience may be like by making it simple for consumers to schedule and pay for rides in Tesla's driverless cars. With features like real-time tracking, anticipated arrival times, and clear pricing, the app's slick, user-friendly UI strives to deliver a flawless booking experience. According to analysts, by 2027, Tesla's robo-taxi service may account for almost 66% of its market worth. This demonstrates how essential autonomous ride-hailing is to Tesla's potential expansion and financial success. The fact that this service might account for such a large portion of Tesla's worth highlights the revolutionary effect it could have on the business. There are significant financial ramifications. Significant cost savings and revenue growth could result from autonomous ride-hailing. Significant operating cost savings could be achieved without the requirement for human drivers. Additionally, Tesla may be able to access new revenue sources like data monetization options, dynamic pricing models based on demand, and subscription services for premium features. Furthermore, a more significant change in the automotive sector might be sparked by the success of Tesla's robo-taxi service. It might hasten the switch to electric and driverless cars and establish new benchmarks for sustainability, efficiency, and safety. In addition to strengthening Tesla's position in the market, this would open the door for infrastructure and legislative changes that facilitate autonomous driving. One issue therefore arises. Why is China's endorsement of Tesla's FSD significant? It's major news if China has approved Tesla's fully autonomous technology. Particularly when it comes to foreign businesses, China is extremely stringent when it comes to data and mapping. With this certification, Tesla has achieved China's exacting criteria, which will allow it to access a huge market. Other rumors state that Tesla may lease its FSD technology to other automakers, such as BYD or Ford. Should this occur, it may provide Tesla with a significant new cash stream and accelerate the industry adoption of their autonomous technology. Ford is now concentrating on creating its own technology, although it previously collaborated with Baidu on autonomous driving projects. This action demonstrates Ford's dedication to enhancing its own capabilities in the field of driverless vehicles. Automakers are looking at substantial new revenue streams as they transition to autonomous electric vehicles. These consist of software upgrades, ride-hailing, and subscription services for autonomous functions. For the auto industry's long-term profitability, this shift might be revolutionary. Let's listen to Tasha Keeney, a well-known analyst and authority on autonomous technology, share some fascinating views. Tasha Keeney is renowned in the world of autonomous cars for her thorough study and innovative analysis. She's here to offer her thoughts and predictions on the future of Tesla's cybertaxi network and their innovative approach to autonomy, while keeping a close watch on the company's developments and marketing tactics. According to Tasha, robotaxis have the potential to make a substantial profit, with each car contributing double-digit operating profit each year. This demonstrates how profitable autonomous ride-hailing will be after it gets over certain major obstacles. Reaching complete autonomy is the biggest obstacle. Tesla must make sure that its vehicles are capable of managing a variety of situations without the need for human assistance. To completely eliminate the requirement for a driver, this entails resolving a number of tricky situations. Regulatory obstacles are yet another important consideration. Autonomous vehicle success depends on navigating the many and varied legal environments. Regulations are very strict in some places, such as California, which reflects the state's emphasis on data privacy and safety. The stringent regulations in California include thorough safety evaluations, stringent testing requirements, and precise reporting of disengagements, situations in which a human driver must take over. Although these regulations are intended to guarantee the safe operation of autonomous vehicles on public roads, they also provide substantial challenges for businesses attempting to implement their technologies. Notwithstanding these difficulties, technological development is typically prioritized above administrative roadblocks in the regulation of autonomous vehicles. For businesses who are pushing the limits of autonomous driving, this is exciting since it shows that regulators are prepared to encourage innovation. The potential advantages of autonomous vehicles, such as fewer traffic accidents brought on by human mistake, better traffic flow, and lower emissions, are being recognized by regulatory agencies more and more. This optimistic perspective aids in fostering an atmosphere that supports the advancement and application of autonomous technologies. The Tesla adventure doesn't end there, though. It's much more fascinating because every day is a new discovery with ups and downs. And that's how Tesla continues to attract more and more investors. However, are you aware of anyone else who is as optimistic about Tesla? That would be Asterisk Seeking Alpha Asterisk, today's sponsor. There is more to Tesla's remarkable success than merely watching from the sidelines. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Asterisk Seeking Alpha Asterisk is your one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Avoid the lamestream media's anti-Tesla clamor. The greatest online source of pro-Tesla news is Asterisk Seeking Alpha Asterisk. Our channel may receive a commission if a customer makes a purchase after clicking on the affiliate links in the description. I appreciate your help. Tasha Keeney added that businesses must be extremely well prepared to satisfy these high requirements due to California's strict rules. This entails making significant investments in safety features, conducting thorough testing, and adhering to stringent reporting regulations for businesses such as Tesla. A company's capacity to meet some of the strictest industry standards can be demonstrated by its successful operation in California, which can act as a benchmark for widespread adoption. Regulations that support the development and use of autonomous cars are in place in about half of the states in the United States. With laws that allow testing and deployment while maintaining safety, these states provide a more encouraging atmosphere. For example, because of their laxer regulations, places like Arizona and Nevada have grown in popularity as testing grounds for autonomous car manufacturers.